And a quick reminder, none of this is financial advice. This is just what I am doing with my money inside of ULTY.
Here we go.
So YieldMax announced some of the changes. And all right, let's start with the most important change, the option strategy itself. This is crucial because options are in the engine that drives ULTY's income. YieldMax is making two very specific adjustments here. First, they're introducing protective hedging. The goal is to soften market crashes and limit downside. That tells us something important. They're actively managing risk now, not just selling premium blindly. Second, they're also using leverage options. The goal there is to capture more upside in strong markets. So this is defense and offense, trying to lose less during sell-offs and participate more when markets are ripping higher. YieldMax basically said it themselves, they need better downside control. Now let's talk about the part everyone actually cares about, dividends. YieldMax was very clear in their official statement. They said future distribution levels may be somewhat lower and less predictable. So let's translate that with no spin. Expect smaller payouts compared to peak insanity, but also expect less violent week-to-week swings. This is a trade-off, yield versus survival. YieldMax is choosing durability over a few weeks of unsustainable maximum yield. They're trying to give the fund a better chance to survive long-term. The next part is really important because YieldMax is trying to reset expectations. They're pushing this hard. They want investors to stop looking at only price or NAV. You know, that's kind of hard when you constantly see your portfolio going down. You didn't say they want you to look at total return. Total return is the price changes plus distribution paid. And here's a key reminder. The NAV drops on ex-dividend dates, and those are normal and expected. Basically, the cash is leaving the fund and going into your pocket. That doesn't automatically mean the strategy failed. Now let's be very clear about what did not change. ULTY is still high risk. It still uses leverage, which magnifies both gains and losses. It still uses aggressive option strategies. There's still no guaranteed weekly or monthly income, and NAV erosion risks are still real. So let me say this clearly. This is not a safe income ETF. It remains a managed high-risk income strategy that's trying to mature. Now that we covered all the individual pieces, this slide ties everything together. Originally, ULTY relied mostly on high volatility stocks to generate maximum option premiums. That part hasn't gone away, but now they're adding lower volatility, large cap stocks into the mix. The goal of that shift is pretty clear: more NAV stability, less violent drawdowns during market corrections, and a smoother long-term ride for investors. This is the big picture change. YieldMax is shifting from maximum yield to risk-managed income. So here's the bottom line. ULTY is shifting from a maximum yield at all costs to a more balanced strategy. That likely means lower income, but potentially more durable income, and hopefully less brutal drawdowns over time. Still risky, just smarter risks. Hey, let me know what you think in the comments. Are you okay with the lower yield? If it means better survivability. If this breakdown helped, hit like, subscribe, and I'll keep covering these updates without the fluff. All right, so the price of ULTY did take a hit at the end of the week. It was holding up pretty good. However, the whole market really did. And I'll share that with you shortly here. Some of the trades that actually ended up costing me a pretty good amount of money. As far as ULTY, it closed at $39.14. My cost basis now stands at $54.18, and my break-even price is sitting at $45.54. I have a total of 285 shares. My market value on ULTY sits at $11,154.90. My total cash invested, which includes dividends, sits at $15,441.06. And my out-of-pocket, which does not include any dividends, stands at $12,978.75, and I have now received $2,462.31. That puts me at $314.01 for the month of December, and now brings my unrealized loss to $4,286.16, which is a negative 27.76%, and my true gain stands at $1,823.85. a negative 14.05%. And because this week's dividend was again ROC, my tax situation only changes a little bit. After tax dividends now sits at $2,289.33, and I'm estimating $172.98 to Uncle Sam. My margin use sits at $9,013.65, and I am currently using $2,141.25, which puts my Robinhood buffer at a really high risk 13.31%. Now that's a combination of some option trades I took a hit on, including my IBIT call that was actually in the positive and I didn't take it. I took that loss. But this channel is about being transparent, so therefore I'm showing that margin use and the real losses. I could have simply made it up that I pulled that money out for something else, but that's not what this channel is about. So I continued to drip. I ended up buying 4 shares at $40.07 on Friday, right before the whole market dipped, and that did cost me $160.28. I used a little bit extra as my dividend was only $153.45. So I'll continue to track that. I'll actually go ahead and put that in red to remind me that I ended up spending a little extra on that drip and all my dividends here. And I actually realized that I just made a mistake here. This is supposed to be zero income, 100% ROC. So going back to the taxes, they actually stand at $139.22 that I'm going to plan on paying Uncle Sam. Back to the dividends though, there it is at 281 shares on record as of Tuesday when the dividend was announced. At 54 cents, the gross dividend ended up being $153.45. And yeah, going to my margin use here, you can see that definitely in playing with fire there. However, I am getting paid on Tuesday of next week. Now I'll be adding some money, so the next week's updated portfolio will actually show, or should show, 0 for the margin used. And you can see here, it doesn't look too good there, so I want to make sure that I keep a buffer. So I did lose some of the money that I gained on the option plays last week, actually all month, but I'm not afraid to show you, man. You can see here that I am holding one position at a negative $892 P&L. That's because right before the market closed, right before the market dipped, I bought 6 calls for the 688 strike price, and it dipped hard and I could not get out. At that point, I might as well let it ride. You can see here my IBIT call has not closed yet. However, will close later on. I am filming this on Friday. So it should close out for $0, not $3. So it did lose $311 there. And the reason why I was positive is I ended up buying 2 additional calls earlier in the week that actually went to positive, had a whole $100 there, and I didn't close it out. That was just a silly, greedy mistake, thinking it was going to go higher. So that's something you got to work on. I definitely don't like losing money, especially when I was up, only to lose it all. So I'm a strong believer that everything happens for a reason. Therefore, I'm going to take that hit, and next time I will make sure that I close it out. A positive is a positive. I always say that. Just didn't follow my rules and let that one get away. On the 688 call, not much more to add there. Just wish I wouldn't have pulled the trigger that early. So coming back to the margin buffer here, the annual rate now sits at 5%. That's all again to Jerome the homie, Powell, and the Fed that dropped the interest rate earlier this week. And it currently shows I'm not paying any interest only because I barely used the margin this week or on Friday really. So I do intend that to go up a little bit. However, the first $1,000 is interest free. So what I may do is just pay down about $1,141 of that and just bring it to a 1K interest free. So I'm not paying interest on that part, just to bring that buffer down a little bit, really, unless the market crashes on Monday or Tuesday, which could theoretically happen the way it went down today, and me planning on adding some extra money on Tuesday. I'm not totally worried about this part yet, but I'll keep you posted. So you can see there definitely was a big hit, 20.74% loss today. That was not all to ULTY though. ULTY today lost $262.42 of that. And it's crazy to think that it was actually holding up. Some of the changes that were made by the YieldMax crew was actually starting to work. So we'll see how that plays out. I'm here to document everything. Not shying away from this one either. I will say it's nice to see them actually trying to figure this thing out. They are holding about $1.4 billion in assets. So there's a lot of money in there, and we'll see how that goes. I'm not here to defend YieldMax. I'm not here to defend ULTY. I'm just here to show you the ride. Whether it goes up or down, my portfolio will show it, and you decide what to do. You can see that there's some updates there. They are calling it the portfolio construction update. YieldMax is implementing refinements to ULTY's equity portfolio. The new approach introduces a more balanced model that includes expanded exposure to underlying reference assets. High volatility equities will continue to serve as a primary for generating option premiums. While past performance is no guarantee of future results, many of these names have historically produced attractive option premium levels, which are essential to elevated distribution levels. We'll see how that goes, because definitely you don't want the past performance that ULTY has had this last year. So they are adding lower volatility Large cap companies will also be added to seek to provide more NAV stability and create a more resilient long-term base. Together, the enhanced structure seeks to balance options premium generated with a smoother investor experience. The fund's combined equity portfolio also aims to expand its investment across sectors, industries, and other asset classes where possible. All right, so we'll end it all here for this week. As a reminder, none of this is financial advice. This is just what I am doing with my money inside of ULTY. See you in next week's video. Comment, like, and subscribe. ULTY YOLO out.